welcome back to Money Talks. I'm Mia Lee, escort, stripper, CPA, and recovered banker. Today I want to talk about cryptocurrency. Crypto gets a lot of attention from our community, both as a method of payment and as a speculative investment opportunity. I want to go a little bit in depth into cryptocurrencies and share my individual investment approach. Currently, I'm only holding Bitcoin and Ethereum. I want to caveat this by saying that I am neither a crypto evangelist nor a fatalist. I do think in this day and age, cryptos can be an important part of a diversified investment portfolio, but very specifically, I still consider cryptocurrencies a high-risk asset, even if you're only investing in the two major currencies. That's just because they have more volatility than the S&P 500. For me personally, I don't speculatively buy cryptos. I do accept cryptocurrency payments from clients who want to pay in crypto, and I accept them in Bitcoin and Ethereum. I have a really simple, stupidly simple way of managing my risk and exposure to cryptocurrency payments. When a client sends me a crypto payment, I immediately sell half of it. And that's just to lock in whatever the exchange rate is from, say, Bitcoin or Ethereum to fiat USD, so that I know that I'm getting that half of that payment in USD, no matter what happens to that currency. After I sell that half, I'll sell another half of what I have left every time that price moves up or down 25%. So I basically take this kind of half-life approach to managing my risk in my crypto exposures. If the currency loses a lot of value, I've minimized my downside risk by taking out my money as the value of the currency is going down. So I might not get my full rate on that booking, but I haven't made nothing if that cryptocurrency crashes or goes to zero. And conversely, because I want some exposure to cryptos, I still have a portion of my money invested in the event that Bitcoin goes to 200,000, Ethereum goes to 10K, then I still own a piece of it. I'm still exposed to the potential uptick. My personal risk management strategy aside, let's talk about Bitcoin and Ethereum and consider the market dominance, technological foundations, and use cases for these two cryptocurrencies. Bitcoin, the first cryptocurrency, is widely recognized for its store of value, akin to digital gold. Its security, powered by a robust proof-of-work mechanism and limited supply cap at 21 million coins, contribute to its value proposition. Ethereum, on the other hand, introduced something called smart contracts, and that enables decentralized applications. And this functionality has established Ethereum as the foundational platform for a wide array of blockchain-based applications, including DeFi and NFTs. Both of these cryptocurrencies are pivotal to crypto markets dynamics and offer different investment pieces. Bitcoin as a value reserve and Ethereum as a utility platform. Navigating the volatility of crypto markets requires a very strategic approach, maintaining a long-term perspective, which is something I love to keep repeating. You want to stay informed through reputable sources and potentially using tools like stop-loss orders so you can help manage the inherent unpredictability of this very volatile asset. Another thing that you want to keep in mind when investing in cryptocurrencies or even just holding cryptocurrencies is the secure management of digital wallets and private keys. Secure management of digital wallets and private keys involves employing strong encryption, two-factor authentication, and keeping private keys offline when possible, like using a cold storage wallet. Another thing you want to be doing if you hold cryptos is regularly updating your security software and being vigilant about phishing scams. Because what's the use in Bitcoin going to 200,000 and you own $500,000 in Bitcoin if it just gets stolen or scammed away from you? Another thing that you want to consider for cryptocurrency investments or just holdings is the tax implications of buying, selling, and trading cryptos. Cryptocurrencies are taxed as property. And so this means that transactions involving buying, selling, trading, or using cryptocurrencies for purchases can trigger capital gains taxes if you have gains on them. And they're treated similar to the sale of stocks and real estate. The specifics of how these transactions are taxed are going to vary from country to country. And it's also in the United States going to depend on how long you hold the cryptos for. Just like you have long and short-term gains for selling stocks, you hold a stock for less than a year, that's a short-term capital gain, which is taxed at your ordinary income rate. If you hold a stock for longer than a year, then that's taxed at a long-term capital gain rate, which is typically more advantageous, especially if you're in a higher tax bracket. Cryptos are treated the same. If I receive Bitcoin as a payment from a client, I'll book that as revenue based on the value of the cryptocurrency on the day that I received. If I get a $5,000 payment in Bitcoin from a client, and let's say I hold on to it, and eventually when I cash out every last Bitcoin increment into USD, let's say when I do that, I have 7,000 USD, then I have a $2,000 gain, depending on how long it's been between when I received that Bitcoin and when I sold that Bitcoin for cash. I'm going to have either a long or a short-term gain or loss, just like when you sell stocks. If you do this on your own through some platform that doesn't give you tax reporting, you're going to have to track these gains and losses by yourself. But established exchanges like Coinbase have a really convenient tax reporting tool. But even though Coinbase is a tax reporting tool, you're still going to have to give them some information. Every tax year, Coinbase sends me this checklist questionnaire for each of my crypto transactions, they ask me the nature of the receipt of my cryptocurrencies. For example, when I receive a $5,000 payment from a client, I have to tag that for Coinbase as a payment because they don't know whether that's a payment or just like crypto that you already had or whatever it is. They rely on you to tell them the nature of those transactions, and you should be honest because not being honest is tax fraud and you don't want to go to jail for tax evasion. Going back to this example of my Coinbase questionnaire about the source of my cryptocurrencies, if I receive a $5,000 payment from a client, that's a payment and I have to pay taxes on that. But I had a friend send me $1,000 equivalent via Bitcoin to pay me back for their share of dinner that we had at 11 Madison Park. That's not taxable, and that's basically a loan repayment. I checked the box for loan repayment on that transaction. People have asked me about altcoins. I'm not a crypto evangelist, and I don't tend to speculatively invest in altcoins. I can't really offer any advice or insight to you if that's what you're interested in. I will say that cryptocurrency as an asset class, and especially with altcoins, should be treated as an extremely high risk, extremely volatile investment. While there is so much allure of cryptocurrencies and people who have made tremendous amounts of money, especially with altcoins, I want to encourage everyone to maintain a very cautious stance. My focus remains on Bitcoin and Ethereum because the rest of the crypto market is just too high risk for me. I don't think I know enough about altcoins to weed out the ones that are going to go gangbusters versus the ones that are going to lose me a lot of money. My somewhat conservative approach is basically informed by the unpredictable nature of cryptocurrencies and their speculative potential. I'm Mia Lee. You can take the girl off Wall Street, but you can't take the banker out of the whore. Drop me your comments, questions, and suggestions for future content.